Welcome to the Swing Trading with Cycles channel. It's January 21st, 2023, and we're going to do an update on crypto here. As we say, this channel is all about price action, using price action to observe trends, and then using those to make money in the markets. Crypto is no exception, and if anything, the opportunity is even bigger here, potentially, and so for certain assets, of course. And so there is a lot of evidence that suggests that we have a long-term bottom in place. Now, I want to be really specific in that everyone always wants to declare that, oh, this is, there's a bottom, it's a bottom, we're now in a long-term bull market, or it's just a bear market rally, we're going to make a lower high. I think that is arrogant and that's just kind of ego. Oh, well, right from the start of the rally, I know exactly how it's going to end. No, of course you don't, right? What we can say for sure, though, is that we've started an uptrend. And what you want to think about right now is market cap. And we talked about this in the previous video. As always, there'll be a pinned comment with previous videos and some other videos about the broader stock market, for instance, etc. But in our previous video, we looked at this CoinGecko.com, which shows you the market cap for different crypto assets. And that's important because especially if you're thinking about something small, like let's say Matic, Polygon, that they're doing a lot of corporate deals. Their market cap right now is, and this is each of these charts is a different crypto asset, and this is the market cap. So that 8.8B, that's 8.8 billion is their market cap right now, and the high you can see right there was 21.5, right? So it would have to more than double to get back to the highs. And there's no reason to think that all of these will get back to their highs by any means. Two that I think will certainly get back to their highs are Bitcoin. So that's this chart here. And these are yearly charts. So each candle is an entire year of price action. And you can see that was the red year of 2018. This was your red year that we just had in 2022, right? And it made a lower low again. So this chart looks identical to the price chart for the most part, but it's looking at the market cap. So right now the market cap of Bitcoin is 448 billion, and the all-time high was 1.3 trillion. So what you have to ask yourself is do we think it's going to get back to that? And of course, that 1.3 trillion market cap was when it hit its all-time high at 69,000. It makes sense, the math, right? We're right here around 23. So you think it's is that triple? Yeah, that's about triple. But this is the important thing, though. Again, each of these candles is an entire year of price actions. This data goes back to 2014, and in 2014, at its low point, the lowest market cap Bitcoin had in 2014, according to this data, was 3.67 billion. Think about that for a second. 3.67 billion. 3.67 billion. Right now it's 447 billion, and it used to be 1.3 trillion. The point there is you've got to, if you want huge returns, 20, 30, 50, 100x even, you've got to find something that's theoretically you have to find something that's relatively small, right? So going back to Polygon, Matic, that's their token, that's the token of the Polygon network. This thing at its low in 2021 had a market cap of 75 million. And right now it's 8.9 billion, and it has an all-time high of 21 billion. So think about that. If you can get in to something that has a $75 million market cap, but the total addressable market suggests it could have a market cap in the billions, then right off Jump Street, you have more than a 10x return, right? Because for something that's 75 million to be worth a billion, that's already think about that, right? That's already 12x, right? 12 times 75. It's a little bit more than that, actually. So that's how you have to think about these things. And so the question is, are there things that are down there in that kind of area? And, Polygon might be one, right? You just kind of think about it in the future. Is there a world where Polygon could be worth 80 billion? Sure. I mean, we're talking maybe 10 years even. I wouldn't say this is even the biggest opportunity. This is just kind of an example. You have something like Uniswap, which is now has a market cap of 6.7 billion. all-time highs for 45. So that would have to like increase like 6x to get back to it. And again, not all of these are going to get back to their all-time highs. Some of them maybe were crazy, right? And should have never been up there. Avalanche, AVAX, the Avalanche token, had an all-time high of 33 billion, almost 34 billion, and it's down here at 5.4. Near is down at 2 billion, was at 13, so that's like a 6x. Solana, which is one of the bigger ones, it was an ETH killer, that's here at 9.57. But notice that we went all the way down to just under 3 billion as at our lows in 2020, this big red candle. And so it's already bounced a huge amount again. So it went below 3 billion, and now here it sits at almost 10 billion again. And its all-time high is 80 billion. So it would have to like 8x to get back to all-time highs. This one is one of the like question marks. I could easily see it getting back to 20, maybe even 30 billion. So still a lot of upside from here potentially, but I doubt that this ever kind of gets back to its all-time high. ETH is probably the most like after Bitcoin, ETH is probably the most obvious that's going to get back to all-time high. But it's also already pretty large. So ETH is at 200 billion. Its all-time high is 575 billion market cap. So that's more than a 2x to get back to its all-time high. But again, that same kind of principle, right? Like, and this doesn't even go back to the like if you were able to get into ETH like really, really, really early, like, you know, kind of like the equivalent of being a person who owned shares before it IPO'd kind of thing, you'd have been able to get basically an ETH for around 30 cents, something like that, right? So crazy return, because ETH right now is like 1,600 and its all-time high is like 4,800. And so this chart doesn't go that far back, but the lowest market cap on this chart is 8 billion. So again, that's a really small number if you think this is an asset that could be worth $1 trillion. I definitely think this is going to get to $1 trillion. So if you think about it, and it's never been at $1 trillion before. Its highest was 575. I think it does get to $1 trillion. And so sitting here at 200 billion, that's a 5x to get to $1 trillion. But again, the time to pounce would have been at 8 billion if you had the vision, like, okay, this thing could have a total addressable market, not even of $1 trillion. Like, even if you thought like it could be worth 50 billion, that's a great return. That's like 6x from that 8 billion. So that's how you want to be thinking about these. Do your research, obviously. Understand what the network is like for the crypto asset, but there are going to be some huge opportunities there. Lido is another one that's a big one. Like, let's just pull that up. I don't know that they have the market cap for Lido, to be fair. Not a market cap chart. Yeah. But you can look it up on CoinGecko. I think it's like $1 billion, maybe. Let's look it up real quick. That's an example of liquid staking, sort of a liquid staking kind of play. So the fully diluted value is 2.3 billion roundabouts. And according to this, it actually has 8 billion in total value locked. So that's interesting. It seems to be trading at a pretty steep discount. So certainly do your research before you go into the deep end of the pool. If you want to just kind of dabble, ETH and Bitcoin are your kind of those are your vessels. And the way that we would know if we have a long-term bottom and if it's going to hold is actually really simple, and it's what we focus on this channel: swing lows and swing highs. And again, that pinned comment is going to have that background for you. I'll flip this to a monthly chart. So this is Bitcoin on the left, ETH on the right, and you can see, I don't have an arrow on that yet, right there, right? So let's zoom in a little bit so we can see that very clearly. Again, that pinned comment will have a video that goes into great detail about this stuff, swing lows and swing highs. But the TLDR is that a swing low is how an uptrend begins, and a swing high is how a downtrend begins. We want to get into things as early as possible in a new uptrend. So in practical terms, that means you want to identify swing lows as soon as they happen so that you can get into an early uptrend so you can ride it. Here's a great example. Let's zoom into the Bitcoin chart. right? This was our last major swing low. Like when I say major, I mean for a major bottom that lasts for many months, right? This was a low at 3,122, right? And once, so that's the candle, you can see the arrow. Once we went above the high of that candle, which was 4,265, we had a swing low in place. And these are monthly candles, right? So that was December 2018. Oh, interesting. That was actually the month that we had the meltdown, the Christmas Eve bottom for the market. So we had an inside month, the next month, another inside month. Like, notice those 2 months, so that's January 2019, February 2019, we weren't able to make a new high above the high that the mark that we had set in December. And then March 2019 still didn't make a high. So 3 months, no high. And then boom, in April, we blast through it. Look at that. Look at it, folks. Do you see that? These candles are just visual representations of a price range. That's all they are, right? And so this month, this was the lowest price range we had traded in. Like, look at that. This is lower than all of this, right? We had this long decline, right? And that was the bottom. That's the low point. Again, that was that 3,122. And so once we cross above the high of that candle, it means we are literally moving higher from there, right? Like you can, I mean, hopefully you can, like, that's making sense. Like, you can see that. And again, it didn't happen for 3 months. We got close. Like here, this upper wick, we tried to get up there, failed, right? We tried to get up there here, failed. This just kind of sat there. And then finally we blast through, and then we get follow through. What I mean by follow through is this makes another new high, right? Notice the high of this candle is here, obviously, right? Which is way higher than this high, and above this high, which is most important because that marks the bottom. But then this next month makes big follow through. This high, way higher than this high. And then next month, this high, way higher than this high, higher than this high. That's an uptrend, higher highs. The other part of an uptrend is the higher lows. So at some point, we're going to decline. The question is, are we able to hold a higher low? And in this case, this is where it gets really interesting. We then decline for 1, 2, 3, 4, 5, 6 months, get a little bit of a low, right? We make a new high, and then this is your COVID crash. Notice this COVID crash actually took price below the high from this candle. It didn't go below the low of that candle, right? Like you can see that, right? Like that's that line. So we went within, so basically another way of thinking about that is we dipped within the range of that December 2018 low candle, right? But we didn't close anywhere near it, right? That's why we have this wick price like ricocheted off of it and closed here, right? So that low was 38.50, but price actually closed at 6,400, right? So that's what you call price rejection. That's a bit more of an advanced topic. But then you can see from that low, we just keep moving higher, making higher highs on the monthly charts, higher highs, higher highs, higher highs, higher highs. And so you think about it like just kind of simplifying the price action. This is essentially one big move, right? Really up to here, right? It's one big move because we just keep holding higher lows. We never break this low. This got a little bit scary, but then we're just kind of making higher highs the whole time. And so the notion here is that this candle is acting as the same as this candle, right? It's the same kind of mechanism. And notice this is not like it's not like it's like a new thing. This is what price does. We did that again in January 2015, right? This candle marked the low, right? We had this big furious rally, right? Like if you just simplify it, boom, and then we just came down, but then price rebounded, right? And then of course it pulled back again. Like that's the simplified high level kind of way of thinking about it. So now what you're saying is, I want to, if we're gonna see something like, so if what we're saying is, we just did something like that and then that, and we're gonna do that, right? Like I want to position myself for this, but you don't want to be doing it here or here or here, like where we've already rallied for 5, 6, 7, 8, 15 months, right? And notice this rally was actually like 35 months, like this time period of time, and so this is our potential low here. This candle marks the low. That low point was 15,479, and the high of this candle is 21,473. That's the level I've been talking about on that previous video, and I've been tweeting about as well. Once we break above that level, it is game on in terms of an action. Like, that is a signal that we may have made a long-term bottom. Notice I used the word may have. I'm not going to declare we've definitely bottomed the way, like, people are like, you'll hear the discourse is we've either definitely bottomed or where this is definitely a bear market rally. I say to folks, calm down. Let's just observe the uptrend as it keeps moving, and we'll zoom into the lower time frames. That's the more advanced stuff, but like to understand where we might place stops. But if you're not that advanced, this might be the time to start dollar cost averaging. People talk about dollar cost averaging in a somewhat moronic way sometimes, if to be honest with you. They talk about dollar cost averaging like here and here and here and here and here. Like, why would you want to be dollar cost averaging here when we're in a downtrend? You want to be dollar cost averaging all along here when we're in an uptrend. Obviously, you don't want to be buying a whole lot here because it's the top, and you'll have a sense of that because you'll know, oh, wait, we've already rallied for 35 months, right? Like, is it likely that we're going to rally for many more months after this? No, because a 35-month rally is a really long rally. So if you're still trying to buy at that point, you're maybe getting a little bit greedy. And oh, by the way a top happens is a swing high. It's exactly the opposite of a swing low. We review that in that detailed video. Again, the pinned comment. I won't go through that in great detail here. But that's how we knew we had a big problem in November, and we're cautious on Bitcoin. And really the market as a whole, the NASDAQ also topped out in November. So we crossed above the 21,473, folks. Now the next big step is to close the month above that level, right? This is our January candle. We needed to close above that level. And then obviously what we want to see in an ideal world is something like that, right? And then that. There'll probably be some consolidation though, right? Maybe even something like that, right? So be like we want to be prepared for that, not freak out because nothing goes up in a straight line, but that's what we want to see, right? And like, I hope you can see that. That is your little uptrend, right? You go like that, and then you have a little pullback, but it's a higher low, and you keep it moving, right? This is when you want to start. Like, so again, if you want to keep it simple, this is when you would start dollar cost averaging. Why? Because this would be month 2 of a new uptrend. Again, this uptrend lasted 35 months. This uptrend lasted 35 months. This one lasted 25 months. Doesn't mean we're going to get an uptrend that definitely lasts 25 or 35 months, but it'll probably last 11, 12 months maybe, right? And you can make a lot of money there as you dollar cost average, and you'll be watching for a lower low. Once we make a lower low, that's your cue that maybe we don't have a long-term bottom. And of course, again, staying above this level, 21,473, is critical. Now, what may happen is we may dip below that level on a lower time frame and then recover it. That would be a false breakdown that we want to be aware of, right? And so that's the Bitcoin number. And so let me just look at the same equivalent thing for ETH. So ETH made a new high on the monthly chart above 1352 because that's the high of this candle. The catch for ETH though is that the low candle for ETH is actually July. So Bitcoin's low candle is November. So Bitcoin kept falling. It kept making lower lows while what ETH actually did was just kind of consolidate in this range, right? Like, notice that that's all these candles are inside the range of this candle. That's another way of saying that. Like, look at this candle. This candle, that's the June candle that made our low down at 880. That candle has a range of 1970 as a high and 880 as the low. So that tells me that 1970 becomes a magnet. Like, that's probably where price is headed right now. And it's going to be important to see how we react. And not necessarily 1970 on the dot. Call it the 2000 area. And that's going to be important because we actually need to get above there to have a swing low, right? To have like or I should say to have a long-term bottom. Because what we have right now is a new high on the monthly chart. But what we really need is a monthly swing low. We want to get above this high here. Let me change that to red so it's easy to see. So we really want to get above that line. So we still have more work to do. And again, that line is closer to 2000. So we could get up there and and see some kind of massive rejection. Or more likely, we'll see some kind of basing and then we kind of blast through, right? So maybe something like, something like that. Maybe it even takes a few months, right? Like, we don't, maybe we even retest it, right? Kind of really freak everybody out, and then it keeps it moving, right? Again, you can see what this is, right? It's a, let me elongate this. Wait, let's do it that way, right? Like that's a little uptrend, right? Like just like we drew for Bitcoin. This is not a prediction, by the way, by any means. This is just a scenario, right? You want to have scenarios about what price may do, so that as the price action develops, you have a sense for like, oh, this is playing out like the bearish scenario, or this is actually the bullish scenario. Because there's obviously a bearish scenario. You always want to think about the bearish scenario. There's a world where we do something like this, that, right? Where we hit our head, like we find a lot of selling at that 2000 level. So let me delete this bullish one, right? So like forget these candles, right? Like maybe we even poke our head above 2000, right? As implied by this schematic. And then we kind of fail lower, right? So now let's turn to the lower time frames to just kind of look at what we'd want to be sort of aware of. This is Bitcoin here. Let's look at the 8-hour chart, actually. So 8-hour chart meaning each candle is 8 hours of price action, right? And I want to change this so it's not the market cap. Oh, this is loading. That's excellent. Well, we can actually zoom into the price to the lower time frame here, obviously. So this is the 8-hour chart here. So this is the last, and we'll close out on this. Like this was our long, sleepy consolidation for like 62 days, like we talked about in the previous video, right? That you can think about. Like, look at that. Price just kind of stayed within this range. Oh, well, it's like, right. So price just stayed within that range for like, this was about 62 days, right? These are 8-hour candles, and we can like look at the hourly version of that, right? Even more candles, same kind of idea. And then we just burst through it. This happened during the CPI, after the CPI print, by the way. We burst through it, and then it's important to see what price, like these periods of consolidation, right? Consolidate, burst higher. Consolidate, burst higher. This was a much longer consolidation, right? Like, look at that. That's kind of similar to this, right? A shorter version of it, and then we burst higher. So you want to be aware of that we're going to have these periods of consolidation at these lower time frames, and then a burst higher if we're continuing the uptrend, right? Now, what's happening right this moment, though, is what you would call, what the technical analysis people call a rising bearish wedge, right? This is not healthy. Hence the term, the phrase bearish. And it makes sense. I mean, look at the steep angle of this ascent. This is an hourly chart. I mean, this thing hasn't really corrected yet for a bit, so it's going to need to. And so you can definitely imagine it's going to come back to like right here, right? Like where this kind of all started, at least. That gets you down to 22,200. And notice we're still way above that 21,473 level. That's like down here. Like we'd have to come all the way down here. And if we did come back and retest that at this point, it could be healthy. We could bounce and it just continues on. But I mean, that would be a pretty steep drop from kind of this perch. But certainly this is going to correct at some point. And so you want to be aware of that and not let it kind of freak you out. Just generally, you want to watch for lower lows. And you can see this big 1 hour candle from January 20th. That's an important low that's going to need to hold, right? That low there is at 21,500. So that's just above the 21,473 level. That's not a surprise. So once we got above that 21,4, that's another way of thinking about this. Once we got above that 21,473 level, price just burst higher, right? Like in one candle, like, leaping tall buildings in a single bound kind of thing. And so you're going to want to make sure that we hold within, like, above that. Like, this range here is going to be important. Like, we don't want to dip too far into this range, or we may find ourselves at the bottom end of it. And again, retesting that 21,473 kind of area. So that's the way to think about it kind of on the lower time frames. And ETH is the same kind of thing, obviously different levels, But right now, this is a bull flag. So this bull flag is actually more healthy because notice it doesn't have that like vertical sort of angle to it. This is much more flat, right? Like it's just, you're just kind of consolidating in this channel. And so the bottom end of that range is around 1637 and the top end is around 1675. And if we just look at a daily chart, you can kind of keep it really simple. Like this is your daily version of that, right? Like those were hourly candles. This is more consolidated. We got this little consolidation here. Like this is the daily version again. And then we've burst higher. We're going to get more consolidation at some point and then a burst higher. And so it's simple here, right? Like if you're really conservative, you don't want to break below 1536, right? Like that would be not great for the structure. You want to kind of bull flag above that level and then burst higher, right? If you want to give the trade a little bit more room, you could see a world where you give it down to basically 1500, and then this candle is really becomes one of your line in the sand, like similar to that hourly candle on the Bitcoin chart that was kind of huge and holding up the whole move. This is doing that for ETH on the daily. I mean, look at these small candles on the daily. They're all making higher highs, but this is where things really get started, right? And so you want to hold above that high, and so that's right there around 1450, 1440, call it, which is quite a distance down from here. It's $200, not a small thing in terms of percentages, but that gives you a sense of the levels you want to watch to the downside as we inevitably pull back, and also potentially levels to get in if one hasn't, right? You can always get in on a trend. People telling you can't get in on a strong trend, that's just a not understanding price action. There's always going to be pullbacks. You just have to be able to judge if and when they're healthy and when there are opportunities to add and where to place your stops. So we're going to leave it at that. Very exciting stuff. This could be the long-term bottom for crypto as a whole, and you can use price action to be data-driven about getting in and dollar cost averaging. Thanks for watching.